University. He spent 2.5 years at the medical school at New York University. He has been on leave for the last 29 years from NYU, and in the meantime, he has become chairman of ACF Industries, chairman of the board of Trans World Airlines, both of which are held by his company. He is the largest shareholder in Texaco, holding 17.3% of Texaco's outstanding stock, and also the largest shareholder in U.S. Steel, with something in excess of 11% of its outstanding securities. The Wall Street Journal recently had a short story about the somewhat unusual relationship that Mr. Icahn has developed with David Roderick, the outgoing chairman of U.S. Steel, and in that story noted that when Mr. Roderick, who has gotten somewhat close to Mr. Icahn over the years, said to him, "How do I find a friend on Wall Street?" Mr. Icahn suggested you'd be better off buying a dog. With that in mind, I'm happy to introduce Carl Icahn to you. Thank you.
Well, thank you, Norman. You told my joke, so I don't have any joke to start the thing off with here. But I will thank Rand for flying us. We can certainly use the business, and we're going to call on you. Maybe we can get you exclusively. Rand said that that his people had told him that I had retired as a Raider, and I can only paraphrase Mark Twain and say the news of my retirement is highly exaggerated, as you may find out in this short term. But it's nothing to do with IT&T, Rand. I think I've been told I have to make this brief, and it's hard for me to speak on this subject briefly, so Norman is going to interrupt me and give me a 2-minute warning, and I'll just sum up. But what I will say is that I really believe, and I believe this very strongly, that our country has great problems. In fact, it's interesting. I agree with Rand on several of the points he's made. I agree that we're going to have a bad recession, and I think it might even be worse sooner or later. We are not producing in this country. Our productivity has fallen far short of what is happening in Japan. When we ended the war, we were the greatest nation on earth. There was no one close to us. Today, we are fast becoming a second-rate power, and very few people will disagree with this. We are now underproducing in Japan. We have a tremendous trade deficit. Inflation is about to start again, and the reason for this really has to be pointed at today's managements, because our corporations are not producing. And the question, when we talk about the takeover mania that exists and the problems with the debt that we have, we only have to look at Japan's balance sheets, and Japan has a great deal more debt than we have. And part of the reason that we have the debt today is really a manifestation of the disease that affects us. There's a great deal of money dammed up in pension funds today, and that money has to get a return. It cannot go into equities, because equities today, corporations cannot give the pension funds the return they need to pay the retiring war babies that will start to retire. They will start to retire after the year 2005, 2010. So what happens is that our corporations that can't make the return for them, the leverage buyout has developed. What happens is that groups will go in, borrow from the pension funds, they will act as conduits, borrow from the pension funds, and buy stocks in these corporations, or buy the equities, and develop a big debt. And this can be corrected. This type of debt structure could be corrected if we just change some of the rules and some of the laws that I will go into later on. But right now, what we have is a problem concerning the country in general, the economy in general. When the war babies start to retire, we will not be able to support them, because our pension funds will have a lot of paper. They will own a lot of paper, they will own a lot of debt, they will own equities and corporations that cannot produce. And why do we have this problem? The question is, the question is, why can't we get rid of the managements and corporations that are not producing, that are not achieving the results that these assets should be able to achieve? Today, what is developed in our country is what I call a corporate culture. And it really is a very interesting thing that we almost have what I consider to be a corporate welfare state. You have levels and levels of vice presidents and corporations that have built up bureaucracies over the last 20, 25 years that really actually produce nothing. And when a new management walks in and tries to make these assets more productive, you suddenly see tremendous results. I'm just can talk about my own two experiences. We went into ACF, American Car and Foundry. And when I went in there, we took that company over back 3-4 years ago. And when I went in there were 100, and these are nice people. I mean, there's nothing wrong with these the corporate culture of people. But when we went in there, in the New York, the company was making $1 million a year. 173 people worked in the New York office, and I went in and I said, well, let me understand what you guys do now that I own this company. We started looking at what they did, and I couldn't figure out what these 173 people taking up 5 floors in New York City did. You know, I saw them, and they went from one guy would make up a pad, you know, it's a leasing business, highly sophisticated, to another. I said, it seems like you guys go around in a circle. And they looked at me and they said, you just don't understand this, Mr. Icahn. This is a very highly complex business, a leasing business. You just don't understand it. So I said, hey, look, I'm not that stupid. I did well on the college boards, for God's sake. Just let me understand what the heck you do. I couldn't figure it out. Well, finally, I did something I'll never do again. I brought in a consultant. Bring in a consultant, Harvard MBA types, and they all come in and say, don't worry, Mr. Icahn, we'll explain what these fellas do. We'll tell you what they do. And they went through, came back about 6-7 weeks later, big book like this. I said, come on, forget the book. Here's your $250,000. Now tell me what they do. All right? I give him a check. The guy looks at me and says, you've been straight with me, Mr. Icahn. He says, we can't figure out what they do either. All right? And that's the true story. True story. So I said, okay. And I gave them all their golden parachutes, and I did everything. I closed the New York office down. Today, ACF, now it's really scary. To this day, I still don't know what they did. We never replaced them. We kept 7 people to do the taxes. And today, we've gotten all our money. We paid down a lot of debt at ACF. We've got all our money out. We put $400 million back into the railcar division with I think, the best fleet in the world today. The company today has a cash flow of $96 million. The income is $45 million. And I think those assets, if I hadn't come along, would still be making no money. Now, this is what America needs. What we have to do is resuscitate our asset base. And the only way we can do that is make our managements answerable. We ask ourselves at times, why do we pay a premium for control? When someone goes and tries to take over a company, it's almost accepted. Well, you have to pay a premium for control. Ask yourself what that means. When you say we have to pay a premium for control, that means that the company, if you can get control of it, meaning the rater in quotes, that company is worth a lot more. So what the management is really saying, if we let you take control and let you get rid of us, this company is worth much more. Now, what does that say about management? If you have to pay to get rid of them, well, they're not too darn good. And that is what occurs in our companies today. What goes on and why we have this structure, I believe it's anti-Darwinian. I believe that you have in corporate America, by and large, with a number of exceptions, you have what I consider to be the survival of the unfittest. What eventuates in American corporations today is that the guy who gets to the top, by and large, and again, there are many exceptions, but by and large, the guy who gets to the top is not the best and the brightest. He's not the guy that really is creative, because those guys tend to be a little abrasive. But what you have almost is a club in corporate America. And the fellow who gets in there is the guy that used to be the head of the fraternity in college. Now, some good head of fraternities, so I mean, I'm not here to pick on everybody in any fraternity, but he was the guy in college who would be there to pat you on the back and have a drink with you, and if you had a problem, he'd always be around. He wasn't doing much schoolwork, but you liked the guy. I mean, you wouldn't let him run the family company, you might not want him to marry your sister, but he was a good guy, okay? And he goes into corporate America, and he's still a good guy. And everybody else likes him, you know, and he's there, and he keeps working his way up, and he makes no waves, and he doesn't bother anybody, okay? But as he moves up, this is the guy that keeps moving up, and he's always there for the board members. He gets to know the board members. They wanted tickets to a football game. He'll get them for them. And as time goes on, he moves up and up and up the ladder, and then maybe he gets to be number 2, next to the head guy. And the one thing that these corporate CEO guys have, the one thing they have in common that I find, generally speaking, and again, there are exceptions, the one thing the guy has is he has a survival instinct. He's good politically. He knows how to survive. Eventually, he gets to the top, and he brings in a number 2 man, right? Now, he's never made any waves, and he'd be crazy to have a number 2 man that's going to make any waves, right? Now, he's a survivor, right? So the number 2 man He'd be crazy to have a number two man that was any smarter than he is. So the number two man, by definition, has to be a little worse than he. So by definition, that number two man is going to come along, and eventually he gets to be number one. So if you follow the pattern, sooner or later, all that company's going to be run by idiots, because you can't have anybody better than the other guy. Okay? And this is what's happening. Survival of the unfittest. It's anti-Darwinian. But this is a sad commentary on American business, and that's what we're going through. You got to get rid of me. Okay. So I can't say too much more. I'm going to just get going. I'm just going to say, in passing, I'm just going to say one thing. I, who know nothing about management, could do what I did at ACF. And again, I'm not applauding myself. I'm saying it's a sad commentary. I didn't know a damn thing about the airline business. We took TWA from losing. Walking in there, I knew nothing about it. The company was losing $200 million, and even my critics say we'll be bankrupt today. And today we just had record earnings of $300 million. Something has to be done, because if I can do it, it really, and I'm telling you that I'm not that great at management. I'm telling you there is something wrong. And if we don't do something in this country about it, we have problems. And what can be done is very simple. We ought to pass one simple law. And the law would just simply state, that if somebody wants to make a bid for a company, and I sort of agree with Rand on this, that it shouldn't be with somebody coming in and saying, I promise to get the money. He should have his financing lined up. He should be able to, just like in England, go in and say, hey, look, financing I have, the money I have. I'm not using the assets of the company to buy the company. I'm coming in just like in England. I have an investment banker with the money, or I have the money. But if he wants to make that bid and he has the money lined up, then that offer has to go to the shareholders, as you do in England. Now you can, make this much more sophisticated. But if we had that rule, there'd be answerability. And if we had answerability, we'd do a great deal to make corporate America a productive machine again and to save our country. Thank you.
Thank you very much, Carl. This may constitute an insider tip, and I'm not sure. Mary McHugh from the SEC, maybe, or Gary, you can tell me if this constitutes prompt disclosure, but I can tell you the good news is that Carl tells me he thinks that newspaper companies are overpriced. Along with the growth in mergers and acquisitions of the 1980s and the restructuring of American corporations that we've witnessed, we have also seen a tremendous growth in the actions that have been brought for violations of our insider trading laws, for violations of our securities laws. It has been the very difficult job of the Securities and Exchange Commission to try to make sure that we have a level playing field for investors, to try to make sure that corporate America is in compliance with the laws that govern the American corporation. The final member of our panel today is Gary Lynch, who is the Director of Enforcement for the Securities and Exchange Commission. Mr. Lynch is a graduate of Syracuse University and has his law degree from Duke, and in 1984 received the Commission's Distinguished Service Award, which is the highest award that is given to officials within the Commission. He will be talking to us today about the regulatory environment that has accompanied the growth of mergers and acquisitions and the increased pace of business in the 1980s. Thank you.
It was clear when Norm asked me to be on this panel and I saw who the other panelists would be, that I was supposed to take the centrist position. As events turn out, I'll do exactly that. I think Rand is quite right in saying that in the 1980s, certainly by the mid-1980s, there were events relating to mergers and acquisitions where things were running out of control. And I think some of the recent cases that we've brought suggest just that. And I would also agree with Carl that shareholders should control the destinies of their respective companies. And with that, I thought I'd briefly begin by describing how the federal securities laws relate to takeovers, because I think there's a general misperception that the SEC has much more power and that we have the ability to be much more intrusive in takeover contests than we actually have. The principle underlying the federal securities laws is that people are entitled to be provided with accurate information relating to an investment decision that they have to make. And that once they're provided with that information, the government should not try to step in and tell them what they can or cannot buy, or whether they should tender in response to a takeover, or whether, in fact, they should vote for the incumbent management of the company or someone who's trying to take over the company. Now, it's my view that this theory of regulation has worked very well since the securities laws, the federal securities laws, came into being in 1933. And it's also my view that it was working well enough until 1968 when the Williams Act came into being, which is the statute that regulates tender offers, that now is not the time to abandon the SEC's traditional role in takeover contests. I guess I'm going to break with the rules of this the panel in responding to an earlier speaker. We were told that we ought to give statements and then use the question and answer period to differ with other speakers. I would disagree with Rand on the point that he made that things changed in 1980 with respect to the SEC's view of its role in takeover contests. I joined the SEC in 1976, and my view is that the general reaction to takeover contests and our view of what we would do in takeover contests stayed pretty much constant from 1976 and remains fairly constant up to this point in time. And it's a role that's dictated to us by the federal securities laws. Certainly, when we get involved in a takeover contest, we don't try to determine whether or not the incumbent management of the company could do a better job of running the company, or whether, in fact, the bidder, as we prefer to call them rather than raiders, would do a better job if that person was successful in taking over the company. And I will tell you candidly that I'm not certain the SEC or any federal agency has the ability to rate incumbent managements or rate raiders and what their likely success will be with respect to a company. The effect of the SEC's neutral posture in these takeover contests is that we assure that the shareholders get information that the bidder wishes to disseminate, and we make certain that the incumbent management has an opportunity and time to put their position on the table before the shareholders have to make a decision as to what they want to do with their stock. And in essence, when a company becomes the subject of a takeover attempt, it is very clear that, at least at the current time, the shareholders of the company will determine the destiny of that company. And that result is, in my view, how it should be, and certainly how it should be under the federal securities laws, which have as their aim the protection of investors. I would agree that it also generally means, at least in the current environment, that if a company becomes the subject of a takeover attempt where there's a very high premium offered over its current market price, that it's very likely, extremely likely, that eventually that company is either going to be sold to the person who initiates the takeover, or that it's going to be sold to a white knight who's brought in at the instance of the management of the company, or the capital structure of the company is going to be changed in a fashion which enables the current shareholders of the company to realize a substantial profit on their equity positions. And the long and short of all of this, very clearly, at least at the current time, is that the equity ownership in public companies is being increasingly converted into debt as a result of the shareholders' decision that they want to realize a profit when they have an opportunity to realize a profit on their shares that they've held for some period of time. I will tell you that I don't have a view as to whether or not the takeover mania is out of control, and I guess that's an appropriate position to have given that the SEC is supposed to be neutral in these contests. I do have a view that the current structure of takeover regulation under the federal securities laws is basically the proper structure and should not be altered. And it's my view that if Congress and the country believes that there has to be brakes put on takeover attempts or LBOs or management buyouts or whatever, these brakes should not be applied through the mechanism of the federal securities laws, but rather should be applied through changes in the tax code or through the restriction of credit by federally insured institutions or some other means that I haven't thought of. I can hardly speak before a group of newspaper editors without saying a few words about a subject that's received a lot of attention in recent years and that I've had some role in, and it's got the added benefit of being takeover related, and that's the some people have referred to as the Wall Street scandals. While I've been extolling the virtues of the federal securities laws and their approach to regulating takeovers, it's also very clear that this system that was set up by Congress and that we administer cannot function as designed when the statutes and rules are flaunted by the participants in the contest, and particularly by securities professionals who disregard their obligations to their clients and to their customers and to the free enterprise system in general. During the past several years, we've exposed some of the fraudulent schemes that did take place relating to mergers and acquisitions in the mid-'80s, and some of the fraud artists who were involved in those schemes. And that it seems clear to me that given what we've learned for the last couple of years, that there were some people in the mergers and acquisitions business who decided for whatever reason that the rules of the game simply didn't apply to them. But it's my view that 1989, as we're moving into the 1990s, that the events that we've exposed and the exposing of those events will have a very salutary effect on a system that seems to me was coming perilously close to going out of control. That's not to say that fraud is not going to occur in connection with mergers and acquisitions or anywhere in the stock markets. They certainly will, and with our best of intentions, with the best of efforts, people are still going to try to defraud other people in every type of business, and certainly in the securities markets. But I think the last couple of years that we've come through have been the start of a cleansing process. Certainly we haven't seen the end of that cleansing process, and the securities markets are going to be the better for it come 1990s. Thank you.
Thank you very much, Gary, and we appreciate your presentation on the regulatory perspective. Perhaps, if I can just digress 1 second before opening up for questions, in trying to assess the truly awesome job that the Securities Exchange Commission has to do as our government regulatory agency in the area of mergers and acquisitions. Just to give you some sense of scale, the Commission brought a major securities fraud case last fall against Michael Milken of Drexel Burnham and Company, which was followed up by an indictment a couple of weeks ago in which it was revealed that Mr. Milken's 1987 salary was $550 million, which is more than 3 times the annual budget of the SEC. With that, perhaps I could open up to the floor for questions. Would you please identify yourself as a member of ASNE and indicate which publication you represent? Yes, sir.
Yes, James Denley, Birmingham Post-Herald in Birmingham, Alabama. Across the country, for many years, the heads of corporations formed the civic leadership, sat on the boards of the United Way, the Chamber of Commerce. When businessmen wanted to do business with their colleagues, they went across Main Street to do so. What impact has the Pac-Man acquisition and merger had on the quality of leadership in communities?
Rand, perhaps you could begin with that, and Carl perhaps as a follow-up.
Maybe, first of all, related to it, I'd like to say that the way that Carl Icahn described getting to be a member of the corporate club and getting to the top sounded a lot harder than the way I got there, and a lot harder than the way he got there. But let me say, on the issue of United Way and the Chamber of Commerce activities and all these other things, I think they've pretty much gone on in due course. We have not had a significant change in the number of American corporations in the Fortune 200, if you will. There have been some mergers. There have been some takeovers, but it hasn't been, I don't think, the kind of thing that has affected the social responsibility of corporations or business, with the possible exception that these companies where a great deal of debt has been taken on, whether it's because of LBO activity or share buyback or something else, there might not be as much money left over for contributions when you first have to make those interest payments to the bank. And I think that is an area that's been impacted to a degree, but I couldn't measure it.
Carl?
Yeah, well, I will say this. I mean, in the companies that I don't know if this is working, but in the companies that I've taken over, as long as the corporation's factories or the corporation's facilities are in these areas, we continue to give the same amount, whether or not we're in those towns, the same amount that was given before to whatever organizations exist there. But I will say something else. When it keeps coming up that, you know, what about the towns and what about the Chamber of Commerce and what have you, I know that's an important factor. But a more important factor is that we, as a country, remain productive, and that we, as a country, are able to use our productive machinery to compete. And if we cannot do that, it won't really matter about anything else, about these aspects that we're talking about. Someone who comes in and buys these companies, if somebody does buy them, and I think that's what you're referring to, you know, if someone comes in and buys a company and he's in New York, he's in outside of these areas, and he's not as intimate with the town that company's running, that he's going to forget it. Well, generally, I don't think that would happen. But the real question you have to ask yourself really is, what is the function of a corporation? And if someone bought common stock in a corporation, and that guy, for instance, lives in Portland, Washington, and the corporation's factories are outside of Portland, Washington, let's say the factory is in Tennessee or the factory somewhere else, does that person really care? If the company isn't doing well, does he really care about that corporation giving money to the Chamber of Commerce in a town in Tennessee or a town in that? I mean, what is the function? The real question is that the company must be profitable in a free enterprise system. That's the first thing. And if it's not profitable, then that's the end of it. And I think that's really the question here. The question is, how do we keep our productive machinery working? And how can we compete in the future? And if we can't compete in the future, and I don't think we are today, if we can't compete in the future, we have a major problem on our hands. And that's the thing that we have to address.
Yes, Senator, please.
I'm Larry Beaupre from the Westchester Rockland newspapers in White Plains, New York, and my question is directed to Mr. Icahn. The Eastern Airlines deal seems to be unraveling and may have unraveled even as I'm asking this question. And it's a two-part question. Number
Well, what do you
one
know
is-
about the Eastern Airlines? What have you heard?
Number one is, would you make another run at the company if in fact the deal with Mr. Uberath is off? And number two is, do you see the role of the unions in the Eastern deal as playing any future role in takeover attempts of major companies?
Well, it's a two-part question. I think the question really is, when you say a run at the company, I think it's more apropos to say that we've been invited by the unions a number of times in the last few weeks. In fact, I got a call from them even this morning to come in and make a bid. And I think that we've said that we are interested in doing that. But we were not going to compete with the Uberoff bid because, quite frankly, we can't understand it. In our looking at the mathematics of the situation, we feel that the common equity, or the equity owned by Texas Air, is underwater. And we're certainly not going to compete with a bid, and we can't understand a bid that pays $400 million for it when we think it's nothing. So if we were to get involved in our deal, I mean, we would work with the unions and get concessions from them, and work with the bondholders and try to merge it with TWA if indeed we made a proposal. I'm not saying we would 100%, but we would be interested in doing that. But I think the reason that Frank Lorenzo has been so much against that, talking to the unions, and I didn't realize, as I said before, I didn't realize I needed his permission to talk to people who call me on the phone, but I guess maybe he thinks we do, although he's withdrawn that lawsuit. He sued us and he withdrew it. But I will say that as far as Eastern is concerned, we are interested and would be interested in working with the unions and making a proposal, but the reason Lorenzo is so much against that, talking to him, I believe, is that he knows that we will not pay for the common equity of that company because we don't think it's worth anything, so therefore we're a bit confused or perhaps astounded that the bid is made. And if that bid goes through and that money is really there, well, we're not going to, we wouldn't compete with that.
We have time for one more question. Do you want to?
The second part of that question had to do with the future role of unions in such takeover.
Yeah, well, I would say this, that I don't think the role of the union is so strong. It's not a takeover here. I mean, in the question of Easton, there's no takeover. I mean, the unions don't want to take the company over. I think that I don't think the unions have that strong a part in these takeovers. I think the fact that the unions are there and strong make it difficult for these companies to be, some of them, to make the profits necessary, and therefore there's a change or a flux. But I don't think the unions are really a part of a takeover attempt in any way that I've seen.
Yes, one more question, please.
I'm David Volk from the Philadelphia Inquirer, and I wanted to ask Mr. Icahn, the key to your argument was that the merger activity was going to improve the competitiveness of American industry and its productivity. And yet, after an unprecedented period of such activity, we seem to lack a scintilla of evidence that overall our economy is becoming more productive, or that overall the companies that have been involved in these activities are more efficient than they are today. And I'd also like to know if Mr. Ariskog had a particular reaction to your contention in that regard.
Well, I just disagree with you on that. I mean, I agree with you. Our country is having great problems, but not because of the merger activity. I think if you look at the companies that have been taken over, and I can only quote again TWA and ACF that I've been involved in, but if you can look at other companies that where there's been takeover and change of management, and indeed, you know, even in Texaco, I'll note that Jim Kinnear has said several times that the fact that we were there, he thinks, helped them restructure the company. He said that publicly, that it woke him up. I think he used the quote, there's nothing that centers a man's thoughts more clearly than the fact that he knows he's going to be hung in a fortnight. And he used that a couple of times. He quoted, I think, Johnson. And so therefore, even the fact that some of this activity comes about, what we need is accountability and answerability from our top managements, and we don't have it today because really the value system is wrong in these managements. I mean, we have managements that are more interested in how many people report to them, how big their Gulf Streams are, you know, what clubs they were invited to go and make a speech at, as opposed to what the bottom line is. And maybe you can't blame them because these managements and these CEOs really aren't held accountable for the most part. I think where you've seen takeovers, and I can name you other companies, where you've seen a takeover happen, the assets of those companies, maybe in a different form, in a different company, under a different name, have become much more productive. And you certainly can't blame their economy. I mean, I think you're putting it backwards. Our economy has problems because 98% of them haven't been taken over, these companies. So the 98%, you can't blame the 2%. Well, you know, there's been more, you know, activity up from 1% to 2%. What about the 98% that just aren't taken over and aren't doing the job? You see, so I think that if you look at where those takeovers have occurred, you've seen activity. And even where they haven't occurred, but they've been shaken up, you see a much stronger company. Again, I'll talk about Texaco. But where you don't have that, and you don't have this answerability, I think you see a horrible situation today.
Thank you, Carl. Rand, would you like to just take 1 second to respond to that as well?
First of all, I think the gross attack on American business is nonsense. It just isn't correct, and it isn't true to wipe a brush across the whole face of America and American business, not in view of what it's done. I think we got a big problem, though. Everybody wants our business to be long-term. Everyone talks about long-term. Plan for long-term R&D, say the business schools. Get your management long-term oriented. Don't worry about the quarter. Because of the way our dividends are taxed, the way the market is pricing our stocks, we're subject to the most short-term rater thinking in this country right now that we could have. Now, I've heard about what this management is like. Carl told me before this meeting today in talking with us, he bought a building up near his house. He moved TWA headquarters up there. He's got housing up there for employees. He lives up there. He goes a few minutes to work. If I tried to do that at ITT with a public corporation, he'd castigate me in the press if he were coming after me, and I wouldn't blame him. But you can do a lot of different things with a completely private company than you can with a public one. And I think a lot of things you have to do with a public company are perfectly correct and right, and they ought to be that way. And I basically would say that for American management across America, that it's well-intended, it's ethical, it's real, it's working hard, it's got some roadblocks. And hopefully, in the Bush administration, some of those roadblocks are going to be removed, and a little more stability is going to be given to the marketplace, to the American people, for all of our good, for the long range that everybody wants to talk about, but very few want to do much about. Thank you.
Thank you very much to all of our panelists today, and thanks to all of you in the audience. If nothing else, I hope that our panel today suggests that not all of the passion and all of the drama takes place on television or in morning sessions, but also takes place in the boardrooms at American business. Thank you.